Now we're going to be talking about pay stubs. A pay stub is a piece of paper that is given to an employee with each paycheck that shows the amount of money that the employee earned, an amount of money that was removed for taxes, insurance, other costs, and deductions, so that the employee knows that, okay, what the amount that they made versus what they got in their bank account. This is the document that gives the breakdown of the whole thing, right? So a pay stub is usually generated electronically via ADP portal, and employees can view this information once they log into the portal, or they're emailed by our finance team upon request, right? But we prefer that you log in and into the portal and print your pay stubs. That way, that's the best and most efficient way you can view the information, which is handy anytime. So let's look at how this looks like. If this is most of the people, who are new to this ADP sort of paycheck, or if they're new to the country, this may be a very important document for them to understand how it works, right? This is how the pay stub looks like. And before I explain what are the different things that they need to view in it once they receive the first paycheck, we'll go through a few things. So paycheck has a pay period and a pay date. The period of work that the employee performs service for the company is called a pay period, right? So, for example, if an employee works from January 1st to February 15th, and then they receive a pay stub on 15th of February, or the actual pay date. If it is a monthly holiday, for example, sometimes it may be Feb 13th if 15th is like for example, Sunday, right? And if they're on a monthly cycle and then they work, then what happens is they receive the paycheck on 15th or 13th, whatever that date is, for the pay period for January 1st to January 31st, if they're on a monthly cycle, which will reflect on their pay stub, and pay date would be February 15th, right? So that's the way the pay period and the pay date works. Insurance deduction. If you've opted for company insurance, the pay stub will show the amount of insurance deduction that has been withheld by the company. If it's an individual amount, where it's employer and spouse or employer and child, depending on the plans that they have, or the entire family. So the plans for the insurance are usually employee only, employer and spouse, employer and child, and entire family. Again, the amount that reflects on the insurance on the pay stub will be different for incentive program employees. So what I mean by that is it's still going to be like everyone else, but they need to contact our finance team for explanation of the pay stub amount and applicable calculations. So some of them might receive a calculation statement with portal fees and other stuff. It's best to discuss with finance team on that particular issue, right? Now, before a pay stub is generated, early on, a W-4 form is filled by the employee. So a W-4 form is the form that tells the company how much of taxes needs to be withheld. So if you view this form very closely, you can see there's a top portion that's personal allowance worksheet. And then it says enter 1 for yourself if you can claim, if no one else can claim you as a dependent. And enter 1 if you're single, have 1 job. So it has various things that you have to go through before a total deduction number comes on line H. So that's right here. So that would determine that number that you get when you add all this A to G is the deduction that the finance team uses for withholding the taxes. And this form has, first name and middle initial, last name, and then whether they're single or married. Out here, married but a single rate, all these various other stuff. So number of allowances which they move from this to this, so things like that. And the employee needs to sign it and then date it and then give it to our finance team. So this document informs the company how to withhold the taxes in your particular situation. The pay stub will have federal taxes, state taxes, and local taxes during that pay period. that you'll be liable to pay. So state taxes, the company must withhold the state taxes in which the actual work was performed, regardless of where you live. Now, there are some exceptions to this, but please consult with our finance team if you've moved from one state to another as a project assignment, which is long-term or short-term. If you're always based out of one state and that's the state you live and work, then obviously that's the state that we withhold. It's only going to show up as one state on your pay stub. But again, it's always good to consult with our finance team if you have questions there. But and one more important point that you have to note is, if for some reason you moved and then you forgot to check your pay stub and you never informed the finance team of the move to the new state, and later you find out after 3 to 4 months, and then you want the company to fix it, unfortunately we're unable to work on that. You may need to work with your accountant at the end of the year, right? So it's best to review your pay stub on a monthly basis. Just check everything in it if it makes sense and everything is proper, once I explain to you. So there's Social Security and Medicare taxes. Most of the employees have to pay Social Security and Medicare taxes. Now, there are a few exceptions to this. For example, an international student on an F1 visa with a treaty country, it cannot be every country. So there is from a treaty country, you may be exempt from it. So if this is the case, please contact our finance team and HR team during orientation and while providing your W-4 form. They'll be asking you a W-4 form. That's when you have to inform the team. Because if you don't inform it at that time that you feel you're exempt, they're going to withhold the Social Security and Medicare. And at the end of the year, when you have to claim it from the IRS, it becomes a very tedious process, because this is a tax that everyone mostly pays, and it requires more paperwork at that point. So we encourage you to take the W-4 form seriously and then inform our HR and finance team early on, the day you start work or whenever you're submitting the W-4, that please do not withhold the Social Security and Medicare taxes. This is my proof that I'm on this type of situation where I'm exempt, and then they'll be more than happy to help you with that. Then pay stub corrections. Upon review of the pay stub, if you notice any errors, please contact the finance team within 30 days. This is because taxes have to be filed, and then if we file the taxes already, it may be very tough for us to change anything. So for best options, as quickly as possible is what we're requesting you to send us with any kind of errors that you see. For example, you move to a new state and then you fail to inform, but you informed after 15 days of the pay stub. At least the following pay stub we can catch up and something can be done. But if you please pay due diligence to your pay stub when it comes to these kind of tax related questions that you have. Now we'll look at the pay stub. So when you receive this pay statement, what you have to remember is on the right side here, you can see a period ending and a pay date. Now, this used to be an old template, but these days it also says, the period, period of work, which actually says this is the, for example, it says January 1st to January 31st. That's the pay period, right? And then it also shows a pay date, which is right here. So it's going to show both in your actual pay stub. And then here you have to view the company. Okay, so company and company address, which is pretty standard. If you see bottom there, it says married for this particular individual, for example. So you have to make sure that this taxable marital status on the pay stub is correct. So if for some reason you see that this is it's showing a single but you're married, you have to inform our finance team right away, right? And here it says federal has 3 deductions, and then the state and local have 2. So this depends on, again, the W-4 form that you submit. Just make sure that whatever you submitted in the W-4 form is reflected on this, and just to make sure that everything is right. So the terminology that you have to remember is there's a gross pay and there's a net pay, right? A gross pay is what you earned before taxes and other deductions. So that's what you're going to see at this point here. So here, for example, regular earnings, this is the gross pay that shows up on the pay stub. So let's just say you have an X amount of salary that you're expecting. Maybe it's an hourly salary, for example. In this case, if someone was making $25 an hour, that's the gross. 25 is a rate, and then these are the number of hours that they need to check. But if you're on a salary, you may just see like a regular earnings number and then a standard hours like 173.33. That's what you see, and then this is a gross out here. That's the amount that you made for this pay period, and that's what you check. And again, here there are other stuff here which says bonus, vacation. You may see those kind of information on your pay stub. So here, this person didn't earn anything on the current, this period is what it says. They didn't earn anything, but year to date they got a $20 bonus, for example. And so here overall it says $1 gross pay. I mean, this is like a template, but the gross pay is what they totally earned during that period. And then there's a net pay. So this is what was deposited into their bank account. So if you see here, this is like a check. Sometimes it may be a direct deposit. Then in that in direct deposit, it's going to say here direct deposit on the pay stub, and then the net payment would be the amount deposited into your bank account. So here it says a 401k deduction out here, and then it says what do you call it? Federal income tax, state, Medicare, and then any state income tax here. Local taxes, it doesn't say anything, but sometimes you may see that on your pay stub, right? Now again, with all of this, you have to make sure that the state in which you're working is the state in which it's withheld. That avoids a lot of complications later, and it's proper reporting that you pay the right state tax. So if you have questions, please feel free to contact our finance team. And here there's an important notes which is also very important, because this gives that if there was a pay change, if there was a state change or anything of that sort. Here it says effective this period, irregular to 25 per hour. So apparently this person, the salary changed to $25 an hour, and then effective this pay period. So that's the important notes for the employee. So they look at it. If it's not a direct deposit, it's a live check, then this check would be mailed to your home address, and then you would have to go to the bank and then deposit it. So that's how you read the pay stub and then analyze the entire stuff. So it's very important you review your pay stub, because that tells you where you are within your how much you made for a pay period, and what's your take home, which is the net pay, how much is it you got. Keep checking it. If you see a variation in the net pay, it's also important for you to check the paycheck at least for the first or second time until it becomes a regular amount that keeps depositing into your account. It's always a good practice to keep checking your pay stub. Thank you very much.